What's up, YouTube? Crazy couple days. Guys, I want to come to you today for two reasons. Number one, let's just kind of go over where we are, things that have happened the last couple days. But number two, and kind of more importantly for this video, I want to go over what's the worst that can happen. What's the lowest we can go with the respect of the traditional markets and then also in Bitcoin. So let's jump straight into it. As usual, we need the charts. Let's click over. All right, so Bitcoin obviously fell down to $20,000. We've had a live stream since this happened. By the way, if you're a YouTube only audience member, love to have you to the live streams, twitch.tv/cryptojack. And what we talked about last stream, which was on Wednesday, is how the prior Bitcoin 2017 all-time high has now been tested from above. Now, a lot of people, myself included, would not be too surprised to see this thing break down. See, what you got to remember is that a lot of market activity is based around where stops are. 30,000 was a great example of that. We didn't think that price would come back down and just bounce off 30K. That was never part of the equation because that's not how markets work. What we thought is they would break below 30K and then there would be some prayer of a reversal beyond that. In fact, 25K was like the level I was really watching, and I thought maybe that's what would happen. That was kind of my projection. Now, obviously that didn't happen. We have to kind of take things at face value and look at where we are. If we're all the way at 20K, sure, perhaps this is what all the market needed, and we rally off and everybody, eats steak instead of bugs for like the next decade. But worst case scenario, if the market behaves like it likes to do, I would not be surprised to see some kind of break below 20K to run the stops of everybody who was maybe long with some stops at 20, or vice versa. If you had shorts and you were looking to close your short, perhaps you close it below 20. I would wait to see some sort of interaction with actual 20K before I get too excited. Also, the other thing to keep in mind is while we've dropped a lot, and while this has been plenty scary, like anybody who says this wasn't scary is lying to you. But not only have those things happen, which is what we'd want to see for a true bottom, we really need to just spend some time. Remember, I have a timing analysis, which is in my TradingView stuff, but it basically points to late Q3 to Q4 of this year being like best case scenario where the bear market comes to an end. So we got plenty of time. So like I said last video, slow down on these entries. Now, what I want to go over at this point is what is the worst that could possibly happen? Where's the lowest we could go? What might that look like on the chart? Before we really get into the crypto side of how bad things could get, the only thing we can really compare the modern activity in the charts, the present day activity that we're seeing in the stock markets and such, is to the stock market itself a long time ago. So I'm going to go to a tweet that I pointed out where I said, now this is back in what's the date on this? January 25th. Okay. Where I say, hey, this is building a structure awfully reminiscent to Wyckoff distribution. Now, distribution is something that we're always watching for because of the implications of it. You do not want to be going long during distribution. In fact, that's the time to be closing out your multi-year, multi-decade longs. So when we first saw this, it was like a very kind of humbling, now's the time to be looking for an exit. So kind of this 35 level was where I personally was looking to exit a lot of my positions. And I put up an update to that. Lo and behold, we did come down, break, came back to this 35 level, and we've been dropping down ever since. Now, why I have this pulled up is because there is a very interesting thing happening in the traditional markets, which is we have hit our Wyckoff technical target. So 30,000 for Dow Jones here was something that we were talking about, back up in the 35 to 36 range. This is not new. We didn't just add this to the chart. We've been going over this particular level for many streams. Even though I'm a crypto focused streamer, I do like to keep my finger on the pulse of the traditional markets because I do believe they are all interconnected in a very fascinating way. What I'm pointing out here is I think it's very interesting that not only did Bitcoin hit this really key level of 20,000, nice round number level, also the prior all-time high, but at the same time, the Dow Jones has hit its 30,000 level. So if you're looking for some hopium, some optimism, there you go. This is it. They both hit really key levels. Perhaps that's all it is, and we V-recover. Maybe not, but we can always hope. So let's play the game of, well, what happens if this does keep dropping? What can we learn from that? Like, how can we pick a target below the Wyckoff technical target? So Wyckoff gives you like a really nice level to be watching for quickly. We saw this happen, over 30 days or so. But the question is, okay, what now? And for that, I have some unfortunate news. We go back in time, thanks to Bruce Fraser. He put this all together, and he does this section called Power Charting. Bruce Fraser, who is RD Wyckoff on Twitter, at RD Wyckoff, but he does a lot of good segments. He's very slept on, in my opinion, but he does some excellent work. And what he pointed out was during the last pandemic, look at what the market did. Now, let's study this structure just for a moment. The marker fell. It was in a tailspin. It reversed out of its downtrend, had a nice rally to the upside. This lasted about 2 years before coming back down and consolidating at new lows during a new accumulation. Now, what's interesting about that is these lows ran the lows, but prior to the run-up. And the reason this is fascinating to me is because if you overlay something like this onto our chart, this was a schematic put up by Chris Dufour, one of our Discord members. But what he did is he overlaid basically what Bruce was saying during this, like, what if things play out the same way, overlaid it onto our Dow Jones chart and showing how if price came all the way back down to run the low, so now when they pull this up to the actual chart we were looking at, that would mean a return all the way down to about $18,000. If this is a true blue nasty recession, if things do get horrific and terrible, then that is my target. That's where we're looking for. So a lot of people will ask me, and this comes up all the time in the live streams, Jack, how do you prepare for maybe we turn around right here, but at the same time, maybe we are going to go all the way down to 18,000. And just like I said during the last YouTube video that I put out, I'm going to say the same thing again. Just slow down. The only thing you can do is let time pass. Technical bottoms, just like shown on this chart here, technical bottoms are formed with time passing. You need a lot of sideways time, essentially. Whereas V bottoms are very quick, and they are the exception, not the rule. V bottoms are very rare in historically speaking, with charts leading to new all-time highs and that kind of stuff. But more times than not, you're going to get this period of sideways, and this is what we should be looking for right here. If the Dow Jones is going back potentially to the lows, again, this video is focused on worst case scenarios and like mentally preparing for it, then perhaps, are you ready for Bitcoin to also go back to the COVID lows? 39,000 or 3,900, excuse me, $4,000. Would you be okay with that? Would you be a buyer? Would you be shaken out of your longs? So not that I'm hoping for this, not that I'm like rooting for this by any means. However, I do want to mentally not be surprised. So my goal in this space is to just be a realist, be logical, and compare, one period of time to another and see what data we can glean from this. And when we zoom out and we're looking at things like the regression curve being broken for the first time, and there's no real fight to overcome it. We've broken down pretty hard, just like we did back in March. Sure, we fought back immediately. Nice little reversals. We haven't really seen something similar yet. So unless we suddenly get a nice little reversal, if this does keep going, how ready would you be to see something like a $3,000 to $4,000 Bitcoin? I wouldn't love it. Don't get me wrong. I wouldn't, especially any of my longs that are up in the 20s. They would not enjoy seeing this kind of thing, but we just have to keep an open mind and understand that anything could happen. We don't have all the facts, and all we can do is plot. Think of it as like setting a bookend of what's possible, the worst case scenario and the best case scenario. And then within that, having a sort of bell curve of possibilities. And as we move one way or the other, as we're trending down, we need to be more cognizant of the reality of potentially hitting these lows. And as we trend up, the reality of potentially hitting these highs and like how we're going to handle each of these situations. Now, what I would love to see is some sort of technical reversal, both during the Dow Jones, right here at the 30K, both with Bitcoin at the 20K. I mean, give me 6 months of just going 90 degrees sideways on the chart, and you got me. That's it. I'm all in, 100x kind of thing. That's where I'm excited. But the other thing I would love to see is give us some sort of accumulation bottom, form a trade range, come down, run the lows, go back up, any of that kind of thing, and we're off to the races. But in the event that doesn't happen, we need to stay vigilant. We need to know that this is a very real possibility. I know a lot of my viewers love margin, even if it's like at 3x. And when you drop 50%, even at a 3x, even at a 2x margin, you're liquidated or close. You're done. because you're probably not going to be only 50%. You're gonna have more than a 50% loss, assuming you went long, higher up here. And same for Bitcoin, whatever the relatable price is for Bitcoin. That's it. I'm not trying to be long-winded here. I hope that was at least got you thinking, got you planning, got you plotting and figuring. If you're looking at your 401k, and speaking of that, I'm gonna put out a video before too long about putting your 401k, putting your IRA in a position to potentially buy Bitcoin. So I'm going to be talking about that kind of stuff. And I'm not trying to encourage you to do that like way up in here. I'm not even trying to encourage you to do it now, but I want you to be thinking, well, look, if we do come back down here, am I going to have dry powder ready? Maybe that's the time to really go hard. Maybe you want to wait to go all in to the bottom. Maybe you want to just kind of piecemeal buy as we're trending down because you really don't believe we're going to come all the way down. I don't care. You need to come up with your own plan and stick to your plan. This is like my whole mantra. Make a plan, stick to it, and do your best to manage the risk along the way. So I think that's it, guys. I love you all. I wish you the best. I hope everything's going well. If you want to come chat with me live, I'll be around Sundays and Wednesdays, 8:30 p.m. Central. Yeah, I think that's it. All right, we'll see you then. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. I'm not your bear guy telling you to sell.